FA1 Key Terms. Part A. Chapter 2. Assets, Liabilities and the Accounting Equation. Asset. An asset is something valuable which a business owns or has the use of. Liability. A liability is something which is owed to somebody else. Capital. Capital is an investment of money or funds with the intention of earning a return. A business proprietor invests capital with the intention of earning profit. The business owes the capital and the profit to the proprietor. Net assets. Net assets equal total assets less total liabilities. Drawings. Drawings are amounts of money taken out of a business by its owner. Account payable. Account payable is a person from whom a business has purchased items and to whom a business owes money. An account payable or creditor is a liability of the business. Trade account payable. Trade account payable is a person to whom a business owes money for debts incurred in the course of trading operations. The term might refer to debts still outstanding which arise from the purchase from suppliers of materials, components or goods for resale. Accounts receivable. Accounts receivable is a person to whom the business has sold items and by whom the business is owed money. An accounts receivable or debtor is an asset of a business. The right to receive payment is owed by the business. Trade account receivable. Trade account receivable is a person who owes the business money for debts incurred in the course of trading operations, i.e. because the business has sold its goods or services. Double entry bookkeeping. Double entry bookkeeping is the system of accounting which reflects the fact that every financial transaction gives rise to two accounting entries, one a debit and the other a credit, and so the total value of debit entries is therefore always equal at any time to the total value of credit entries. Capital expenditure is expenditure which results in the acquisition of non-current assets, or an improvement in their earning capacity. Capital expenditure on non-current assets results in the appearance of non-current asset in the accounts of the business. The total amount of capital expenditure is not deducted from income, calculating the profit for an accounting period. It is deemed to be expenditure that brings benefits to the business over more than one accounting period. Revenue expenditure. Revenue expenditure is expenditure which is incurred either for the purpose of the trade of the business, including expenditure classified as selling and distribution expenses, administration expenses and finance charges, or to maintain the existing earning capacity of non-current assets, for example repairs to non-current assets.